Welcome everybody to yet another webinar hosted by FX Educast, our favorite broker in the whole world, QTime FX, and of course your host, Munther Marji. Hello again, we meet again, and I'm very happy about that. You know me, I like talking to you guys about the market, and I am going to do the same thing that we have been doing every day. Today we are going to look for the best opportunities in the market again. How's everybody? I hope you guys are doing great. I hope you had a good day in the market since we said goodbye 21 hours ago. And today, of course, we still have a lot of opportunities to talk about. But first I want to say hi to everybody who's watching us. Thank you very much for being here. It means a lot to me that you guys are here day after day. And of course, we are trying our best to give you the best opportunities in the market, to tell you about where to buy, where to sell. Some of the pairs we talked about yesterday did not move much, like the euro, for example. It's getting really boring. But we are still looking for the best opportunities we can find. So guys, let me know, how are you? How's everybody? Where are you coming from? This is something that I really wanted to talk to you about for a long time. I wanted to ask this question, but you know, every day we jump directly to the charts. We say, let's go, let's find these opportunities, and we don't know much about each other. Today, I want to start this webinar with attempting to know as much as I can about my viewers. So where are you coming from? This is important to me. I really want to know. Before we start, I just want to fix the chat. Of course, I have to insert the link in order for me to see the chat, guys. I really want to see what you guys are talking about. If you have any requests, any questions at all, and it is working. Fantastic. So now we can say, let's go. And as usual, guys, we always start with the most traded pair in the whole of the Forex market. Everybody is interested in the euro. I'm always asked, what do you think about the euro? This is the first question every time someone wants to ask me about anything. So guys, yesterday we talked about this bullish wave count that we had, and we even dived deeper to the lesser degree wave count. If you are an electrician, you know what I'm talking about. And we said that because we have a 3-wave sequence to the downside coming after a 5-wave sequence to the upside, and especially that inside these waves we can find subwaves or lesser degree waves that are also clear for the wave count. Of course, when you see 5 up, 3 down, that means the chances of moving to the upside are greater than the chances of moving to the downside, definitely. So yesterday I presented you with this wave count, guys. The recovery from November 14th low was really impressive, and not in the size. In the size it was modest, around a little more than 100 pips, I think. 109 pips to be exact, from 109.88 to 10.97. However, it's not the size that is really interesting to me. It is the shape, the wave count, the sequence itself. And as you can see, guys, we can count wave 1 up from that low, November 14th low here, then wave 2, and then wave 3, the largest as usual, wave 4, and then again wave 5, the final push, just a little bit above wave 3. Even inside wave 3, we can find 5 waves to the upside. 1, 2, 3, 4, 5, and 4 inside. This wave is also a clear 3-wave ABC, as you can see. And after finishing the 5-wave up, we do have a drop coming in 3 waves, not 5. Some of you may count this as a wave, but this wave can be easily related to this one in a way that makes more sense than relating it to this one. That's why this is A, B, C. And inside C, we have, of course, 5-wave sequence in which all the Elliott wave rules are satisfied, and even the guidelines, most of the guidelines are satisfied. Of course, we have 1, 2, 3 is the largest, 2 is sharp, 4 is horizontal or sideways. This satisfies the alternation guideline. 3 being the longest is, of course, one of the guidelines. It's not a rule, but it's a guideline. And the wave personality, this is something maybe I also talked about yesterday. The wave personality of wave C, guys, it needs to scare people, you know. When this drop started, everybody was thinking that the euro is going to go higher, but then it started falling, of course. When everybody thinks one thing, the market moves to the other direction. This is psychology and sentiment of the market. Everybody who's been in the market for a long time knows this painful fact, but it is the fact of the market. So wave C, guys, one of the things I really like about wave C is that it scared the bulls, you know. Here, after recovering in a 5-wave to the upside, we are having 3s to the downside. Everybody thought that the euro is going to continue higher, but of course, after 5 comes 3. Now, 3 was expected, this 3-wave sequence was expected maybe to terminate between 10.50 and a maximum of 10.13. We dropped a little bit below that, about 10-15 pips below that. We did not trade below 10 at all. I think the low was 10.02. And now, guys, after that, we were expecting the market to start moving higher, and it did. And I like this. But there's a problem with this move to the upside. It is not strong enough. It is not unfolding in a 5-wave sequence. I want this to happen. I really want to see a 5-wave sequence to the upside, just like this one. Even if it's smaller, I don't care. But I want to be able, when I count the waves higher from this low here, Monday low, I want to be able to count 5 waves to the upside. Up until now, this is not happening. The price action is still very limited. We got to 10.02 here, guys, and then we started recovering until we reached, I think, 25. That's it. That's it. 23 pips from Monday low. This is all that the Euro bulls could do, although we have finished a 3-wave sequence to the downside. So with this, guys, we are, of course, we are still with this wave count. We believe in it. We want to depend on it in our trading, but I want to see something. I want to see strength. I'm not seeing strength here. I mean, I'm sure you agree with me, guys. Look at this move. Is this a strong move? Of course not. And we are back again, very close to the 88.6 retracement level, which is exactly at $1.10, which is, of course, psychological level. It's very close to very important levels like the Fibonacci retracement 109.95 and the point from which we started this whole bullish wave count, which is 109.88. So between 110, 109.95 and 109.88, we have 12 pips. We have 3 important levels in these 12 pips, and that is very important, because when you have several levels meeting very close to each other, they create an important support or resistance area. In this case, of course, it is a support area. It is a support area that is very important in my own opinion, and we need to pay attention to it. And it's very simple, guys. It is very simple. In my own opinion, my opinion was expressed yesterday, of course, because the market did not move much. I don't have a lot of information that I can change my mind on. I'm going to keep exactly the same outlook like yesterday. Yesterday we said that as long as we are above 109.88, the euro is expected to rise. But immediately when this level gives way, we will ditch our bullish expectations immediately. Okay? So we are going to continue to depend on 109.98 for our support. Let me leave this on the chart for you guys. So support at 109.88. Now, if you take a look at what has been happening this week after reaching Monday low, during the American session, we started to recover, but this recovery stopped at 10.25. Again, we dropped. It was, of course, very, very modest. It's a very small move. We rose again yesterday, and yesterday high was also 25. During the Asian session, I think, or no, not during the Asian session, late in the American session, we also had the high 25.6. So in my own opinion, resistance is at 10.25. So we have 37 pips between our support and resistance, and we can use these levels to build our trading strategy for the day. Okay, guys? Now, once the resistance gives way, we want to be long. But in case a surprise happens and the support is the level that gives way, we want to be short. Okay, it's very simple. We are going to follow a very simple technique today, very simple trading strategy. Of course, I do believe in keeping your analysis simple. I talked about this in previous webinars. But the skill, of course, is to identify the most important support, the most important resistance. And after that, it's a matter of just watching the market, waiting for a break, and the level that gives way first is the level that indicates the direction of the next move in the market. A break of support, that's a drop. A break of the resistance, that's a rising move. All right, so let us build trading strategies. I want to be long immediately when we start trading above 10.25, 10 pips, or maybe 5 pips. 5 pips is enough to me, guys. Not 10 pips, 5. So I'm gonna place an order to buy at 10.30. Once we start trading above this level here, the red horizontal line, as you can see, it has been stopping the price all week. Once we start trading above it, I want to be long, especially that there is good evidence that the correction, which was moving lower, is now over. It's terminated. And this is the thing that I'm going to consider and going to keep in my mind as long as we do not trade below 109.88. So that's why only 5 pips above this high here I want to be long, and I want to take a chance on the euro on the long side of the market. Now support is at 109.88, and of course once support is broken, we need to stop believing that the euro is going higher, because we are giving it too many chances and we're not seeing a real strong move to the upside. So what are we waiting for? Either the euro proves that it can go higher, or we should just leave it and look for other opportunities in the market. That's why my stop is going to be below 109.88, and I believe that, guys, maybe 20 pips is enough. Let's see how that works. 68, yeah, that makes a good trade, because we have, first of all, we compare, of course, our stop to our risk management rules. 62 pips of a stop, that's something we are willing to accept. Now, what about the targets? Target 2, I am going to use October 18th daily high, the highest price seen in the last 3 months. It was 1183. It happened just before the market closed on that Friday. I remember it very, very well. But since then, unfortunately, for almost 40 days now, we are unable to trade above that level. That level was the reason, reaching that level was the reason for this drop. And if the euro wants to show the world that it's going higher for a very large number of pips, like a lot of things suggest on the chart, it should start doing so by breaking above 1183. Now, initial target, of course, I'm going to give you a target that is much smaller than that. And for that, I will need to look at the chart. I'm going to look for something that is between 40 and 50 pips. For example, this is the top of wave 2 of one lesser degree. It is 68. That is 38 pips. Maybe we can add a little bit to that. Let me see, guys. Actually, I'm gonna be a modest trader today, and I'm gonna use this target, which is only 38 pips. So only 38 pips, guys. A small target or modest, it's not small, it is, but it is modest. It's a modest target. And this, of course, is my recommendation for now. Of course, I'm going to issue another recommendation in case the surprise happens and 109.88 gives way. It's going to be the exact opposite to this one. Going to sell at 109.68 with a stop at 10:30. Of course, if we start moving to the upside after dropping to these levels here, and then we start rising and we break above this resistance, I don't want to keep my short position, of course. Now, the limit or the two targets, target one, we have been talking about this for a long time. 109.03 is the next important support. And we have a long-term Fibonacci retracement level. The 78.6 retracement level is at, for the long term, is at 108.14. That is going to be my second target. So there you go, guys. I'm going to keep this on the chart for a minute or so, so you can copy it, you can screenshot it, you can go directly to your QTimeFX trading account and place your trade there. So guys, we have a buy order. We are going to place it right now. A buy order at 10:30, order at 109.68 each. Now we're going to place two orders. Each entry is the stop for the other order, so it is a stop reverse kind of situation. And for the upside, this today our target is very modest. It's only 38 pips. Let's hope to see it met. For the sell, we have a target of 65 pips. I'm going to use, guys, I'm going to use the target one, the first target for both orders. And that is something that comes because of losing hope in a move to the upside. You know me, I really believe that the euro is going to the upside, guys. But there are conditions for that. Currently, I still have reason to believe that the euro is going to the upside, of course. And I really want to see a huge move to the upside. But now, it is just not happening, guys. It is just not happening. Now, I have logged in to my QTimeFX live account. It is my live account. I keep my money there with QTimeFX, our favorite broker in the whole world. And when people ask me, what do you think of QTimeFX, I just read their advertisement, you know, where they provide everything you need to know there. They are offering you fantastic spreads, zero commission, a bonus, segregated client funds, everything you want to find in your broker is in QTime FX. And of course, they top that with offering you these free sessions. These free sessions to show you where are the important levels in the market. They got me. They wanted me to tell you about the best opportunities in the market. They are paying me on your behalf, and that is saying something, guys. They care about you. They want you to make profit in this market. So they got you an experienced trader to help you identify the best opportunities in the market every day. So thank you, QTime FX, for your sponsorship. And I am now in my account, in my QTime FX account, and I'm gonna see these orders. So I'm gonna buy at 10:30 with a stop at 109.68 and a profit at 110.68. And there you go, guys. We have placed our order to buy the euro at 10:30. Our stop is 109.68. Our limit is 10.68. Screenshot this or go directly to your QTime FX account and place your order. Now, of course, we do have another order. We want to sell stop, of course, 109.68 with a stop at 10:30 and a limit at 109.03. Okay, and place. And this is it, guys. As you can see, sold stop at 109.68. Our stop loss is 10:30 and our limit is at 109.03. And okay, so with this, of course, we are now done with the euro. We are doing a great job because usually the euro takes the whole hour of this webinar. We are doing this in about 25 minutes. I like this very much. It gives us, of course, more room to talk about other instruments. And I'm going to leave these on the screen, and I'm going to do this so you guys can see recommendations. I'm going to keep this for 30 seconds or so on the screen, guys, so you can copy them if you like before we move on to the next instrument we are going to talk about. All right, guys. So I hope you copied this, and I really hope that we trigger the buy order, the buy signal. But of course, we follow the market. If we did not move higher and we started moving lower and we are trading below 109.88, of course, I am going to sell. I'm keeping this order. I'm selling at 109.68. There's no doubt about it. Even with my view of the market of moving higher, I'm a reasonable trader, of course. I know that we have an important support here. Once this is broken, I don't want to be long. I am going to look for short opportunities to trade the market. Now, something that is related to the euro dollar, we talked about this yesterday, is the euro yen. And we want to talk about this as well. I'm gonna go to my hourly chart first, and I'm gonna use some indicators. I'm going to take a look at what these indicators are telling me. There is some signs of weakness, of course, with the stochastic and RSI both reaching overbought levels and then moving to the downside. I like this. If I was shorting this thing, I would feel good about it. So this is the first thing that we note on the chart. Another thing is, of course, we're going to draw trend lines and see where they are pointing. Very simple techniques, guys. They have been used for more than 100 years, for more than a whole century. People, they need something really complex, computer systems, very complex calculations in order to know where to sell and where to buy. But these things like trend lines, indicators, everything that is related to technical analysis was used for at least tens of years. When we talk about indicators, we have been using the RSI, for example, for 40 years, more than 40 years, stochastics more than 40 years, and so on. For things like trend lines and price patterns, we have been using this for 100 years. So these are the things that people depend on. And they may look very simple, but they work. If they didn't work, nobody would be talking about them after 100 years of first use of this technique to find trading opportunities in the market. So guys, on our array, I want a horizontal line. Let's see where this trend line is currently running. I assume that it's very close to this low here, while the upper resistance is very close to this top right here. And I'm going to use these levels in order to identify support and resistance levels, but I'm going to keep looking, of course. I like this as a resistance. It is 2041. So resistance. Okay, what about the support? Support, guys, is at this low here, which is 1982. I think that makes sense, although we do have, we probably have, let's see if we do have another interesting support here. I really believe that this is the one we need to care about, because this is, of course, a rising trend line from a Monday American session low. Actually, it is Monday low, not just the American session, but for the whole day. And as you can see, from there we can draw a rising trend line. This rising trend line is currently running extremely close to the bottom of the moving average band, which, you know me, I really care about. And this trend line is currently running around 3 or 4, 23, 24. I'm going to keep it, I'm going to consider it to be at 5. 25. Okay, so we have 36 pips between support and resistance. Very ideal. It is really ideal, because when we have the support and resistance close to each other, that gives us the opportunity to create trading strategies that with reasonable stops. But when the resistance and support are very far from each other, of course we cannot do that unless we use very large stop loss levels. So we are lucky here because the support and resistance are not very far from each other. And that is something that I really like. I really like this. Now, let's start. I want to be 10 pips. Let's see if 10 is enough. Actually, with this, yeah, I believe 10 pips is good enough. With the stop, now I want to place the stop also 10 pips below the support. So our stop is going to be at 119.95, 56 pips of a stop. That is very reasonable, very good. I like that. And of course, now we're going to look for targets. So this is the buy recommendation for today. I'm gonna now give you the sell recommendation. So we're going to sell at 19.95 with a stop at 20.51. And we keep these here on the chart while we go and search for our targets. All right, guys. Taking a look at the daily chart, as you can see, we do have support here provided by the moving average, which is extremely close to this daily low here, Monday daily low, which is 1965. So even if we start trading below 20.05, I want to see the price, guys, move below this support. So I'm going to add this as another support. And if you are going to follow the recommendation for today, and the short is hit, the short recommendation is triggered, and we are in the market with a short position. If we go towards 1965, if we are in the 60s, what I want you to do, guys, is to look for what the market is going to do there. If the market looks like it's going to find support there, it's not breaking the 60s, maybe it would be better to close your position. But once we start trading below 1965, that opens the way lower, guys. And lower, let's see how lower can we go. I like this. I like this move to the upside. I'm going to calculate retracements for the last part of this move. Yes, I like this very much. Let's see where is, for example, the 50% level and 61.8, and then we decide which we want to use as our target for today. So the 50% level is at 1926, and as you can see, guys, this bottom is 1925. So I would not hesitate to use 1926 as my target. Of course, guys, we have talked about this many times previously. When we have another thing that confirms the importance of one of the retracement levels, then we give this level more attention, and we assign it as the most important retracement level, because we have other reasons to believe that it is important. In this case, of course, we have the 50% level. It's one of the most important retracement levels there is. And of course, now with the bottom here, with this bottom only 1 pip away from it, I would easily prefer it to this one, 61.8 level, which has no important previous tops or bottoms very close to it. So this bottom here, it gave it away, guys. It told me that 1926 or the 50% level is the level that I really need to care about, and I'm gonna do just that. And that's why, of course, we have this initial target. Now, what if the price keeps falling? We do have the 71.4 retracement level at 1831 here. I don't believe this is going to be a problem for the bears. If we break below the moving average band, we can get here. This is a support, but then once we start trading below the support, we will be trading below two very important things, guys. First of all, the moving average band, and then this previous bottom right here, which indicates strength to the downside. And in that case, I really do not believe that this level can do anything to stop that. But once we reach the next level, maybe, because here we do have a previous support or resistance very close to this one. As you can see, look at this top here, this top here. They are very close. Even this top here, maybe it's not very clear. Let me clear it. As you can see, it's very close to 71.4 retracement level. And that is why I'm going to use 1832 as my second target. So this is the first recommendation that we are done with. We have a sell at 1995. The reason to sell, of course, is trading below this rising trend line from Monday low. You can find this trend line on the hourly chart and it looks fantastic. The slope is very good. It's not very steep, not very flat. I like that. And it is touching several candles, exact close of several candles. And to add to that, this trend line is very, very close to the bottom of the moving average band. So it is definitely the support we need to care about. Once we start trading below it, which is 2005, so 10 pips below that is 1995. Once we do that, we want to be short. That's why, guys, our order is at 1995. The stop is going to be above this falling trend line here, 2051 here. This is 2051. Of course, with time, this trend line is going to go lower and lower, and we will have more room above this trend line before our stop is hit. Now, what if the market finds support above this moving average band like it has been doing for a while now, for more than 24 hours, and above this rising trend line and start rising to the upside? In this case, of course, finding support here, guys, by itself is a reason to believe that the market is going higher. So without breaking this, we cannot say, well, the euro yen is going to drop. No, we cannot say that, because we do have an important support just below the areas we are trading in. And now, on the other hand, if we break above this falling trend line, then we will have two reasons to believe that this market is going higher. First of all, survival above an important support here, and then the penetration of an important resistance. And then we will have two reasons. We get in with a long position. That's why we have an order. We are going to place an order when we finish this analysis to buy at 2051. But we are still looking for targets for this trade. So if we start trading above this trend line here, where can we go? That means here, of course, and we are going to continue moving to the upside. Of course, if we break this, that will be expected. Now, with getting in at in the 2050s, what I want to have is a target around 21 as my initial target. That's why I'm going to use these retracement levels. And I'm going to use the 78.6 and 88.6 to see where they land. And if I like where I found them, I'm going to use these numbers as my targets. 78.6 immediately takes a lot of attention because it's very close to 21 figure, because it's very close to these tops here, as you can see, guys. 88.6 is not very far also. It is at 22 pips above that at 21.22. It can also be used, but I'm going to be I'm not going to ask for much. I'm not going to be greedy today. I'm going to use 21 as my limit. 49 pips. Yeah, that's enough for me. So target 1. Or I'm going to make it 50. Around 50. We want to round it up to 50. So round 50 target. 2101. My second target is going to be beyond that, much beyond that. And in this case, of course, I'm going to be trading once we break resistance levels here, then challenging these tops here will become probable. This high here is 2148. This high here is 2144. Here is 47. Obviously, we have something in this area, and that's why I'm gonna use this area, or I'm gonna check if we have a retracement that is very close to that, and I can find it here at 2169, just above these tops. We do have the 50% level, guys, and I like that very much. I'm gonna use it. There you go, guys. These are the recommendations for the euro yen. So we now know where are the important support and resistance levels on the euro against the dollar and on the euro against the yen. And I hope that will give you a clear idea about where the euro is going. Of course, we can use these two pairs to confirm the strength or the weakness of the euro. For example, if we break above the resistance 10.25 on the euro dollar and 20.41 on the euro yen, that indicates that the euro is going to move higher. On the other hand, if we break below 109.88 on the euro dollar, and that is confirmed by a break below the support of 20.05 on the euro yen, then that indicates weakness. So if we have two breaks in the same direction on these two pairs, that adds to the confidence of this direction in the euro itself, guys. Okay, so we want to know where the euro is going today. We need to keep our eyes on these two pairs. That's why I use the first hour, guys, to talk about these two pairs in specific, and I saved gold for the second hour. What is going to happen now is that we're going to watch these levels, the support and resistance levels for the euro against the dollar and the euro against the yen. And once we have a break, or let me call it a double break, in the same direction, that is when we are going to put our confidence in that direction, and we're going to follow the euro on that path. Breaking above both resistance levels, we will believe that the euro is going higher. We are going to put our money in that direction. But if we break both support levels, we are going to bet on the weakness of the euro today. Okay, guys? So before we take our first break for today, I am going to my QTimeFX live account, of course, and I want to place my orders. We are going to buy stop in case we start trading above 2041. That's 2051. With a stop at 1995. And a limit, I'm going to use the first target in both orders, 2101. Of course, there's a possibility of reaching the second target, but I don't want to be greedy. I want to play with you guys who like modest profit targets, 30, 40 pips, something like that. I don't find it to be bad at all, to tell you the truth, because a lot of times the market moves in the direction you're expecting for 30, 40, 50, and then it comes back. So I really understand the viewers who sent me last week and the week before that, please can you provide smaller targets with your original targets. So that's why I started giving you target 1, target 2 for every signal that I issue. So there you go, guys. 2051 we want to be long, 1995 is our stop. If we get there, we don't want to keep this position, but if we start moving in the right direction, we will close this position with a profit of 50 pips, 2101, and place. And yes, we are now ready to take advantage of a break to the upside if it happens on the euro yen. Now, of course, we're going to place a sell order at 1995 with a stop at 2051 and a target at 1926. So it's going to be a sell stop at 1995. Our stop is 2051 and our limit is 1926. And place. And there you go, guys. So take a look at these numbers again if you want to screenshot them. If you want to go directly to your QTimeFX account and place your orders right now, go ahead and do it. If you just want to write them down, go ahead and do that. If you want to screenshot this, go ahead and do that and keep them with you. And of course, we're going to see through the day how they develop. Buy at 2051 with a stop at 1995, sell at 1995 with a stop at 2051. This is what we believe the euro yen is going to do today. A break above 2041. We are not doing anything between 2041 and 2005, but a break of either of these levels. In that case, we are going to follow the direction of the break. Above 2041, a buy is recommended. Below 2005, a sell is recommended. And with this, guys, we come to the end of our first hour. And I cannot believe we have already finished 1 hour. Very, very nice times with you guys here. I really like when you are here with me. And I want to see you on the second hour. We're going to talk about other instruments, of course. Second hour is going to be dedicated to commodities today. We're going to talk about gold. We're going to talk about crude oil, so don't miss that. Two very exciting instruments, very volatile. They give us a lot of joy when they are moving in the direction that we are expecting. And they give, for that reason, of course, they give fantastic trading opportunities when the market is clear. So we're going to look for resistance and support on commodities in the second hour. And we are going to specify where should we buy, where should we sell. For now, guys, I'm going to take a short break, 6 or 7 minutes, something like that. And I will be back with you after this break. But before I go, I want to give a huge thank you to QTimeFX, our favorite broker in the whole world, because this live stream is sponsored by QTimeFX. QTimeFX offers you guys the chance to trade with a maximum leverage of 500 to 1, and because of the fantastic spreads they are giving everybody, they were awarded the award for the lowest forex spread broker of 2018 by the ACIFMA. Imagine yourself trading with a euro-dollar spread of 0.4 of a pip, not even half a pip, guys, and the same spread on the dollar yen, and that comes, of course, with zero commission. If we gave you these fantastic spreads and then we said, well, you have to pay commission because we are providing you with a very professional service, very fantastic pricing, then that would not be a huge advantage. But we do not do things like this at QTimeFX. We do it in a different way, in a way that makes it easier for you guys to achieve profit. That's why we are giving you these fantastic spreads. At the same time, we are not charging you any commission. Zero commission guaranteed. And to add to that, client funds are segregated in UOB, which is ranked in the 22nd place in the World Bank ranking, guys. That is a real good thing for the security of your money. If you are worrying about that with other brokers, you will not have to worry about that with QTimeFX. Segregated client funds in a bank that is ranked in the 22nd place in the world, which is pretty pretty good. Now you can open a VIP account and not only use these fantastic trading conditions, but get yourself a very generous bonus. Get $500 or $250 depending on your deposit. So if you make a deposit of $150, only $150, guys, we are offering you the chance to get yourself a bonus of $250. And if you decide to deposit $300 in your account, then we are giving you the opportunity to get yourself a very generous bonus of $500. And guys, as I always say, this is not trading credit here. We're not talking about trading credit. We are talking about real green American dollars that you can withdraw and spend on whatever you like. You can go and buy yourself that gadget you've been looking at for a while, or you can take the missus to a pretty romantic weekend, and she will say, of course, thank you for that. And you will say, well, it happened because QTime FX were generous enough to offer me $500 for making the right decision to trade with a broker who offers you these great trading conditions. But there is, of course, guys, something that you need to know. To get these promotional benefits, you must contact FX_Educast via Telegram. So it is FX_Educast via Telegram. Without going through this same exact channel of communication, we will not be able to offer you the promotional benefits that we are presenting. And if you do decide to contact FX_Educast via Telegram, you will find a very professional, very friendly team ready to help you with big smiles on their faces. And we will be very happy to have you with us. So what are you waiting for? Come enjoy these spreads. Come and trade with a broker who has the award for the lowest spreads in 2018, a broker who keeps your funds segregated in one of the biggest banks in the world, and of course a broker who is offering you a very generous bonus. And on top of that, guys, of course, they are the reason why these webinars are happening. They want you to make money. They said, Munther, come and show our traders, our clients, where are the most important levels in the market, where should they buy, where should they sell to make money in this market, because we, QTime FX, want our brokers to make money. That is, of course, a huge advantage on the top of everything we have been talking about. And of course, guys, that is why I highly recommend opening your accounts with QTime FX, because they clearly want you to achieve profit. Low spreads, bonus, no commission, and free trading signals, free trading webinars. So don't wait at all. Contact us at FX_Educast via Telegram, and let's open this account for you today. A live account where you can apply all these trading ideas that we are presenting you with every day. With this, I'm going to leave you guys for a few minutes, 6-7 minutes, something like that, and I'm going to be back. Okay, guys? Love you all very much. See you after the break. Second hour theme is going to be commodities. See you in 5. Bye-bye. All right, people. How's everybody? How are you doing? A short break, and we are back. And as promised, of course, guys, after the short break, we are going to talk about trading opportunities on commodities. We are going to talk about gold, and we're going to talk about crude oil and look and see if there are any trading opportunities there. Before we go, I have one comment during this break. Affinity saying I'm going to follow both the euro dollar and euro yen recommendations. Munther wish me profit. Of course I wish you profit, buddy. Of course I wish you profit, and I'm going to trade the same things. As you saw, I have already placed my orders on both of these instruments. I'm really hoping for the best, hoping for a push to the upside on both instruments, the euro dollar and euro yen. But of course, if the market breaks important support, I do have orders to sell both instruments. So I really wish you profit. Of course I do. I always wish you all, my dear viewers, my fellow traders, my fighters in this market, I really wish you profit every day. Okay, guys. So now we're going to move to the commodity section of this webinar. I'm going to start, of course, with the of course, precious metal. And let's start by looking at, I don't want to confuse it. These numbers are from yesterday, so I'm gonna remove everything, every drawing tool. And now let us look at what is happening. Guys, you know my view. If you are coming back to this webinar, you know what I think. I think that we do have many reasons to believe that gold is going higher. And of course, when I say reasons, what I mean is that technical analysis reasons. I'm not interested. I am interested in other reasons, but for this specific webinar, it is a technical analysis webinar. And I love technical analysis. I really do. So let me tell you why, guys, I believe that gold is going to move higher. First of all, after, of course, a very obvious uptrend move, we have seen a double three type of correction. And I want to point it out to you. We have a 3 to the downside here. And after an X wave, we also have a 3 to the downside here. Alrighty, guys. So with these patterns appearing on the chart, of course, we should be looking to buy. Now, another reason to believe in the recovery of gold after dropping, of course, more than 1,000 pips from the top seen early in September is this daily close here. We have it. If you want to change this to a bar chart, you're going to see that this is a reversal bar. If you want to keep it in the candles world, this is a doji. Of course, for an ideal doji, we need to have the open and close exactly at the same price. But here, they are very, very close to each other. The open and the close. The open is 55.60. The close is 56.30. So we are talking about 7 pips only, and that is good enough for me to classify this daily candle as a doji. And one of the things that I really believe in, guys, is the power of these patterns after a movement that has been in the market for a while. So when this appears after this kind of movement, that is when I believe that it's going to have an effect. And the market itself approved this to me, guys, with the 2 days that followed. Green Day, Green Day. It's not the band Green Day, of course. If you are as old as I am, you would remember a band called Green Day. They were very famous maybe, what, 20 years ago or something like that. maybe 15, 20. I don't remember the exact time, but a green day is not that bad. A green day here, and what I'm talking about is these green candles on the daily chart, and they confirmed, of course, what this candle told us, that the market's moving higher, and we started recovering, and we almost got to 80. But then again, this was a move to the downside. Of course, it was expected to go up and down, of course, and we had reasons to believe that gold was about to drop, but to tell you the truth, I did not expect it to drop to these levels. Of course, after reaching 78, I said to myself, we're going to have 100 pip or so to the downside, and then boom, we're going to take off again. Unfortunately, the drop was larger than my expectations, but it's still above this bottom from which a recovery has started, in my own opinion. And we need to hold this technical opinion for as long as this low is not penetrated. So what I want to see here is gold not trading below this low here or this Fibonacci level. As you can see, the Fibonacci level is extremely close to the actual low. The actual low was 45.82 cents. The Fibonacci level itself was $46.05. That is unbelievable, guys. You are talking about what, 23 cents? Only 23 cents, which translates to 2.3 pips. And that is unbelievable accuracy. With this beautiful accuracy, with these three-wave sequence patterns pointing to the downside, with this unbelievable move to the upside, we are still going to believe in the possibility of gold moving hundreds upon hundreds of pips to the upside, because of a simple observation of the correction started here at 1557. So if this whole move is a correction, then the price is going to reach a higher high above the top reached just before the correction has started. Very simple, it's common sense actually. It's not even an analysis technique, because correction means moves against the direction of the main trend. This is obviously the main trend. These are corrections. Now for the main trend to resume, we need to see a higher high. So from these levels, imagine guys, we're talking about levels above 1557. So we're talking about almost exactly 1,000 pips up from current levels. I love this. It's a huge trading opportunity, and I'm gonna, although I have to admit that this drop is larger than my expectations. I would really prefer it to stop around here in these levels, not this low here. This is very low, but as long as 1446 is not broken, I'm going to keep my opinion the same. I'm going to believe in this huge opportunity to make hundreds upon hundreds of pips on gold by buying it, by taking a long position, not by selling it. That, of course, if we break below 1446, I'm going to change my mind completely. I'm going to stop looking to buy, and I'm going to start looking for a short position. So, guys, let us, first of all, I want to see the indicators on the daily and 4-hour and hourly chart, and I'm gonna, okay, not bad at all. Look at this here, guys. As you can see, the stochastics has already generated a buy signal on the daily chart, which is good. This is very good for our technical outlook. Let's see if the 4-hour chart has more good news for us. We are moving higher, and we are also recovering on the RSI. We do have this beautiful candle here. It's a reversal bar. If we want to switch to a bar chart, it is a reversal bar, guys, because we have reached the lowest price during this drop here, but we closed in the green. That is a reversal bar, and we should believe in this. However, obviously, we are still trading below the moving average band. I want to see that broken. And what else I'm wishing for, I want to see the MACD above its signal line, and I want to see the shape, or let me say the slope of the RSI getting more aggressive around these levels. So obviously we do have a chance. Up until now, the daily and 4-hour charts are promising for the bullish expectations. Now, for the hourly chart, we also have more good news. The first thing that I want you to see is that we have penetrated the moving average band to the upside, and we have been trading there for how many hours? It's not quite 24 hours, but it's maybe around 18 hours or something like that. Okay, so we are still trading above the moving average band. This is bullish, of course. The slope of the MACD is good. RSI touched the 50% equilibrium level, and now it's starting to recover. The stochastic also is pointing to the downside, which is of course a negative thing, but there's a positive explanation for this, and that is we are getting closer to the oversold areas, guys, here with this tiny, very small retreat, which is trading above the moving average band. So we may get to the oversold with what, 10 pips lower or something like that, while we hold above this moving average band, and then the stochastic indicator will start recovering, with the price recovering from areas that are, and this is very, very important, above the moving average band. With this, of course, I really believe that gold is going to have a chance today. Yesterday we dropped to around 50, but now we are almost 100 pips above yesterday's low. This is a good start, but it's only the start. Believe me, guys, this thing has a great opportunity of moving 1,000 pips to the upside. And I really hope that in a month or 2 months, maybe early next year, right after Christmas and New Year's, I'm gonna go back to this video on YouTube. I'm gonna write a comment talking about how we got 1,000 pips from what we are saying right now. So I'm gonna start building my strategy for today, but on the long run, we are seeing all sorts of observations on the chart to support the idea that this market is going to the upside. So guys, I'm gonna look for support and resistance. Honestly, I don't want to sell if we do not break 1446, so I'm not gonna issue a short signal here in any place. Even if we start trading below the moving average band, I don't care. Without breaking this bottom here, I don't want to be short on this instrument because it's really promising of a move to the upside. So definitely I'm going to use the support at 1446. Even if we drop, any drop that is still above 1446 means nothing. It will not make me change my mind. I will only change my mind about gold if we start trading below 1446, and that makes it equivalent to 109.88 in euro. So you guys, you can use these levels to confirm each other. If we are trading above 1446 on gold and 109.88 on euro, then they both can go higher. But if we have a double break below 1446, below 109.88, then we need to cool down our bullish expectations and completely cancel them from our mind. I'm gonna look for closer support to place my stop below, because we cannot place our stop below 1446. It is very far. Now, this is an hourly chart. This trend line is currently around 65, but I'm definitely can get it closer to the stop right here and even to closer levels. So we are going to need until tomorrow to see this trend line very close to yesterday high, but at the same time we can draw the trend line in a different way and try to see if it makes sense. I want to see if we draw it here at the highest close. So I'm using the top here, the high, but I'm using the close here. This is the highest close in this area. And as you can see, when we draw it in that way, it is touching yesterday high. And this trend line is currently running at 61. Okay, to fine tune that, I'm going to go one step lower to the 15-minute chart. And I'm going to see what micro-term retracement level we have around 61 in order to use that as my resistance. What about 61.8? Let me see where is this level. It is at 60.90, and I am going to use this probably as my resistance. Actually, with this high here at 26 to be exact, it is, let's call it 30 or 20 if you want. This high here is, as you can see, it is an exact touch on at the 50% level, and it's inside the moving average band. So I'm going to use the 50% level as my resistance for today. 60.30. Okay, so resistance is going to be 60.30. All right, now I'm going to look for a closer support so I can place, if I want to buy once we start trading above 60.30, I want to place my stop, not of course below 46, because that would leave me with more than 150 pips of a stop loss. Of course, you need, if you get at 61.30, for example, you want to place your stop 20-30 pips below 46. That's definitely more than 150 pips and even closer to 200 pips. So I don't want to have that kind of stop, guys. I'm going to look for a closer, much closer stop. For that, I am going to do this. I'm going to show you what I'm going to do. And this is something that you can take with you and use in your own analysis. Once we have a promising recovery attempt like this one, we are going to calculate the retracement levels, and I'm gonna give you my secret here. As long as we do not break below 71.4, then this recovery attempt has a fighting chance. But most of the time, what I have noticed is that when we start trading below 71.4, then the recovery attempt is probably going to fail, and we are going to reach lows that are below this previous bottom right here. So 53.5, this is my support. Another support, or let me call it initial support, 53.5. Okay, now I can start building my strategy. And I'm going to use these levels, guys. First of all, the long position, of course, the one that we are putting our faith in. If we start trading above $1460.30, I want to be long on gold. So I'm going to buy above this level, and I'm very excited about this buy. So I'm going to use only 5 pips above this level, 1460.8. Now my stop is going to be below the initial support, which is 1453.5. If we place it 20 pips below that, it's going to be 1451.5. I know that is almost 100 pips, but it's still within the levels or the kind of the risk that we are willing to accept. My stop is a maximum of 99 pips, and this is very close to the maximum, but we are still okay. Now, what about the targets? As usual, I'm going to give you a modest target and a more ambitious one. So the initial target is going to be what, maybe 50, 60, something like that. If we start trading above this trend line, of course, let me delete this trend line here. If we do start trading above this trend line in this area here, we can expect the market to move higher towards the high retracement levels of this whole drop. And in this case, we have 71.4 level at $70.50, but I want something closer than that. That is why I'm going to use the 61.8 retracement at 67.7. So this is a modest target in my own opinion, and now I'm going to look for a much more exciting target. I'm going to use maybe this here. Okay, these recommendations are from last week, so I'm gonna delete everything and I'm gonna use this. Let me clean this mess so we can see where our levels are going to be. Alrighty. Now, this last part, I'm very interested in retracements for this last part of the drop. They will tell us a lot about the market, guys. So if we start testing them, weakness against these levels will be a reason to get worried, of course, while, of course, breaking them will be very exciting. And I know it looks very far, but I'm really interested in 71.4 retracement for this whole drop. It is at 1495.9, and I'm gonna use that as my second target. I know it's very far, but this is gold, and it can get there. So we have time to decide on whether we are going to use the initial target or the second target for today's recommendations. Let me change the color so I don't get confused. So this is the first recommendation for today. What about the short? Guys, I don't want to be short even if the initial support is broken. I want to be short only if the main support is broken, which is 1446. That's why I'm going to place my order to sell, let's say 30 pips below that. Sell at 1443. Now a stop. We need a stop. Maybe if we get just a little bit above the 1450 landmark, that would be enough. That's why I'm going to use 1451. I don't want to place a very huge stop on this one. Now let's talk about the targets. Target 1, target 2. Okay, initial target is going to be, of course, modest, but the second target is going to be this one. Let me switch to my daily chart and calculate retracement levels for this whole move. And we do have the 50%. Of course, if we break the 38.2, then the 50 will become a good possibility. 1410.9, so I'm going to use that. I know it's crazy far, but it's the second target, not the first one. 1410.9. Now, what about the initial target? I'm going to give you something that you can use in your order, not very far. If we start trading below this bottom here, then we can start looking for targets in the 30s, of course. We have this high, for example, 37.70. Let's see if that makes a good target. 37.70. Let's place it 10 pips below that, so 36.70. 63 pips. Yeah, okay. Yeah, okay. So these are our recommendations for gold today, and we are going to rush to our Q Time FX live account, where we are going to place them. So first of all, we do have a buy stop at, let me remember, 60.8. Only pips above current market. Not very far. Stop 51.5. And the limit, guys, I'm sorry, I'm going to use this one. I know you probably prefer this one. Please go ahead and use it. Please go ahead and use this target if you want. But for me, for what I really believe is going to happen, if we start breaking resistance levels, gold is going to explode. So if we start trading above our trend line here, I want to be long and I want to be milking it. Okay, so that's why 95.9, guys. I'm placing this. My stop is placed, my entry, and go. And there you go, guys. An order to buy at 60.80 with a stop loss at 51.50 and a limit at 95.90. And okay, now the sell, of course, if we don't move to the upside, we want to be in, but only, guys, only with a break below 14.46. Even if we start dropping here, I don't want to be short. Okay, only with a break below 14.46, and I placed my entry 30 pips below that, so 14.43. Stop is 14.51. And my limit is 36.7. And place. And this is it, guys. There you go. These are the recommendations for today. I'm going to keep them on the screen for a few seconds. If you want to screenshot them, write them down, or go directly to your QTime FX account and place your orders immediately, because we are around less than 20 minutes away from London Open, and maybe on the top of the next hour some action will start to happen. Okay, so this is gold for today. Now let us move to oil. And for oil, first I want to remind you what we talked about yesterday. We said that we have what looks like a 5-wave sequence to the upside and a three-wave sequence to the downside with what looks like a triangle as wave B. And one of the very interesting things about this wave count is that the correction, the ABC correction to the downside, stopped extremely close to 38.2 retracement level, which was at the time, of course, a bullish indication. And as you can see, guys, bullish indication here, stopping at the 38.2 after a three-wave sequence to the downside. That means the market is going to move higher. And this is something that you can take with you wherever you go. It's not just for this kind of situation. Whenever you see 5 up, 3 down, and the 3 down is stopping very close to our retracement level, that is probably a good place to buy. Why? Because the possibility of moving higher is high, because the targets are very good with that kind of setup, and another reason, because the stop is usually not very expensive. So even if the setup does not work, you're not going to lose a lot of money. You're going to lose a modest stop. You can place your stop immediately below this retracement level or immediately below the next retracement level. And in most cases, that means a modest stop, not a very large one. So as you can see, guys, I'm trying to make this not only analysis for you, but also an opportunity to learn something that you can use over and over again. This is what I really want you to go away with from my webinars, because I believe in helping beginners, of course, and I love helping you guys, the guys who are just beginning. But with experience, with time passing by, what I want you to is to depend on yourselves. I don't want you to depend on someone who has been in the market for 19 years like me all your life. Yeah, at the beginning, of course, you're going to need that help. It will save you tons of money and a large number of mistakes. But later on, I want you to be trading on your own. And that's why I'm explaining to you how I do things. Now, from what I said here, you can take this understanding of such situation and use it on other charts on your own without the help of Munther or anything else, or anyone else, sorry. I'm not a thing, I'm a person. Okay, so this is, of course, bullish. Another bullish observation is here, guys. You see, once we start trading at or above the moving average band, we did so for the whole time. You know, here we are finding support inside the moving average band. Here too, here too, here too. An attempt to break below it, it failed, and we moved to the upside. This is unbelievably fantastic. When you find support at the moving average like this, that is an indication of a rising move. And as you can see, we did rise, and we are still trading above the moving average. So we have reason to believe that crude oil is in a good situation. It's not weak. It's not going to start dropping. It is probably going to trade higher above the top of wave 5, which was 58.74. Unfortunately, that means a very small target, because currently we are we're trading 30-40 pips below that. So of course we are going to specify a resistance. We need to wait for the price to trade above the resistance, and then we are going to aim for levels above, just above wave 5. That is not a lot of profit, but of course, how can we overcome that? Once we start trading above the top of wave 5, we are going to look for targets. We may find retracement levels, previous tops and bottoms, trend lines, channels, anything that you can find on the chart to help you specify what kind of targets above this top here we should be waiting for. And for that, of course, we need to shift to the daily chart. For our chart, we talked about this resistance yesterday. I really think that we can still use it again today. But above here, I think we are going to find ourselves a good target. Yes, we do have a good target. The retracement that has been stopping these recovery attempts is obviously the Fibonacci 61.8 at $58.65. But the next one is the 71.4 retracement level, my retracement level, which is at 59.84. Okay, guys, so we want to be targeting this level in case we have enough evidence on the chart that the market is going higher. So keep in mind, 59.84, this is going to be our upwards target. Now with this, we can start building strategy. And for building a strategy, of course, we're going to go back to the hourly chart. Now, what if we draw a trend line from the top of wave 5, touching the recent highs here? And it's going to be running very close to this top right here, which is yesterday high, or at least it is yesterday. It's not the daily high, it's an intraday high late in the day. And the highest to close here is 58.43. So if we start trading above 58.43, maybe it would be a good idea to buy. So buy at 58, 10 pips above that, 53. My stop, I'm just thinking out loud, guys. This is not a recommendation yet. We're going to think about it. We're going to see if it is okay for our risk management rules, for our current situation in the market, depending on, first of all, how far the support and resistance are from each other, and then of course how far the entry is from the stop. So let's look for stop. If we trade above this trend line, we don't want to be below this bottom here, but unfortunately this is very far, so I'm going to use this low here, 57.90. Obviously 2 hours in a row, it's the low, and it's very close to this horizontal support area, and it was almost exactly at the moving average band. So 57.90 is my initial support. I want to place my stop like 20 pips below that, so it's 57.70. Now the target, initial target, I'm going to keep it small, but the second target is the retracement level on the daily chart we have just talked about, which is 59.84. So with 59.84 as our second target, we need to find a smaller target to use as our initial target. And for that, I'm going to go to the daily chart again. It's like a trip, a round trip, going daily, hourly, hourly, daily. These are the two time frames that I use most. Of course, we need to keep our eyes on every time frame that is of relevance. Hourly, 15 minutes, 5 minutes, 4 hours, daily, in order to understand the exact situation of the market. Now, 59.25 is the Dow 2/3 retracement level, but no, I want something even closer than that. Although it looks very attractive because of these highs here. Look at this daily high. It is 59.24. Imagine that. Here it is 59.39. Here it is 59.27. So honestly, it is really, really attractive. I'm going to use it. 59.25. So these are my targets for the long position on oil for today, and let's see if we can sell. Where should we sell? I'm going to use exactly the opposite to this signal. If we start trading below 57.90 with a good number of pips, 20 pips or something like that, then a short position will become justified. And in this case, I want to sell at 57.70 with a stop above the resistance we just talked about, which of course it takes us back to the entry for the buy signal. So my stop is going to be at 58.53. Now, what about the targets? Initial target is going to be this bottom right here, which is 57.21. That makes perfect sense. 57.21, but I want a larger target now, and for this I need to go back where, you guessed it, the hourly chart. Let's go there. So this is going to be my initial target. I want to see why this is the initial target. This is the bottom of wave C, and at the same time it's very, very close to 38.2 retracement level. But what about these levels here? Let me decide on one of these two. I love these two very much. They are both, you know, they don't have previous tops and bottoms very close to them. But this is the one which is closer to this rising trend line. That's why I'm going to use it, 55.96. So 55.96. And there you go, guys. This is the recommendation I'm going with, a pair of recommendations for oil today. Yesterday we only took a look at the market. We said that we are not going to issue recommendations on crude oil futures for now. That was yesterday. Now we do have a recommendation. I don't want to confuse you. That's why I'm gonna keep only these recommendations here. Okay, guys, these are the recommendations. Copy them. Go directly to your QTimeFX account and place the orders immediately, or screenshot them, write them down, whatever you want. These are the recommendations for today on oil. We want to buy if we reach 58.53. That's around 20 pips above current market levels, with a stop at 57.70. Initial target 59.25. Second target is 59.84. Now the sell signal is going to be the exact opposite to that. Sell at 57.70, stop at 58.53, exactly the opposite. It's a reverse. Initial target is going to be at the recent low we have seen, which is of course also very close to a Fibonacci level, 57.21. But the second target is much more ambitious at 55.96. And believe me, guys, of course, I will recommend you use the initial targets, but I really believe we can move towards the second targets in both cases. If this is head, I really believe we can get here. If this is head, I really believe we can get here. Okay, with this, guys, we reach the end of our second hour, the commodity hour. I'm going to call it that from now on, commodity hour. I like that name. So we have recommendations on gold and on crude oil, and I really hope that these recommendations will help you make some profit in the market today. We will be talking about them tomorrow, of course, and see what happens to them. But for now, these are the recommendations. I'm going to keep it for a few seconds on the screen before I say bye-bye for a short break. And then, of course, we're going back to continue what we are doing. And that is, of course, finding the best, absolute best opportunities in the market for today. And before I go, guys, I want to thank QTimeFX for their sponsorship of this webinar. Guys, QTimeFX came to me and said, Munther, you are an experienced trader, 19 years in the market, Chartered Market Technician designation, CMT, you are CMT, and you have experience in issuing signals and in helping investment funds to achieve profit in the market, helping your own clients. So what we want you to do is to come and give these recommendations and your view of the market to our clients, and we are going to pay you on their behalf. This is how much QTimeFX wants you to make money. They want you to be successful. And of course, you want to trade with a broker who wants you to be successful. Not a broker who makes things harder for you to achieve profit, but a broker who makes things easier for you to reach the profit zone and the kind of profit you are in this market for. That's why they are sponsoring these webinars every day, and they are offering you fantastic spreads, guys. That's why they got the award for the lowest forex spread broker of 2018 by the ACI FMA. Imagine yourself trading with 0.4 of a pip on the euro dollar and the dollar yen, and similar attractive, very attractive spreads on other instruments. With zero commission, of course, because if we offer you these tight spreads with no, with the option, without the option of trading with no commission, then that will not be very attractive. Why? You will be saving on the spread, and what you have saved on the spread, you will be paying in commission. No, 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 no. That's not how QTimeFX do things. These guys, they do things in a different way. They want you to make money. That's why they are giving you fantastic spreads with zero commission. And above that, they want you to feel secure about your funds. That's why they are segregated in UOB, which is ranked in the 22nd place in World Bank ranking. That, of course, if I was you, I was looking for a broker, I would be, of course, thinking about a broker who is offering me this kind of segregated client funds. I love that. I like it very much. And to top that, guys, not only segregated funds, very low and tight spreads, zero commission, great leverage and sponsorship of these trading sessions. To top that, guys, they are offering you $500 in bonus. Did you hear that? $500 in real American money, not trading credit like a lot of brokers do. No, no, no. Real American money which you can withdraw. Now you can make a deposit of $150, only $150, guys. That is a very modest amount of money, and get $250 in bonus, more than your initial deposit. Again, you can deposit $300 and get a bonus of $500. What an offer! I love this offer, and I really think that you should consider it when you are opening your account. So come open your account with us and enjoy these fantastic benefits. But to get these promotional benefits, you must contact us at fx_decast via Telegram, so we can help you and get you these benefits and make sure that you are going to enjoy these benefits. So guys, contact us, fx_decast via Telegram, and you will find the nicest, most friendly, most professional team in the world ready to help you with huge smiles on their faces. What you're waiting for? Come open your account, get the bonus, get these fantastic spreads, and start making money in the market. So with this, guys, we are going to take our second and final short break of the day. And after the break, of course, I'm going to be back to talk about other instruments. We talked about the euro dollar, euro yen, and in the second hour, we talked about commodities. So I'm assuming that we are going to talk about more forex pairs, the important forex pairs, after the break. So see you in 5, 6, 7 minutes, something like that, guys. I will be back shortly. Meanwhile, get yourself something to drink or think about what markets you want me to cover in the final hour of today's webinar. And of course, I'm going to check your comments if there is any request to analyze any pair, any market at all. As long as I have the chart for it, I'm going to do it with a big smile on my face. So see you after the break. Love you all. Don't go away. Meet me after the break here for more trading opportunities, just like the ones we have introduced so far. All right, my fellow traders, how's everybody? How are you doing, guys? How is this going for you? I really hope that you are ready for our third hour, where we will continue to dig deep for trading opportunities in the market today. Hello, I'm your host, Munther Marji, with FX Educast, and of course, our favorite broker in the whole world, QTime FX. And we are here to help you identify the best trading opportunities in the market for today, Wednesday, November 27, 2019. We are getting closer and closer to the end of the year, and 2020 is very near, it's very close. What are your hopes and dreams for the new year? What did you achieve in the market this year? Let me know in the comments. And if you have any questions, of course, if you have any market at all that you want me to take a look at, I will do that with a big smile on my face. So let's go. Let's go to the charts immediately. What instruments we still need to talk about? How about the pound? Everybody's talking about the pound these days. And the pound did try to recover recently, got a little bit above 29, but that was short-lived. So what is going to happen now? Let's see. First of all, I want to take a look at the indicators on the hourly, daily, 4-hour charts, and boom, 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 boom. It's just like it, it took me a second to see what bullish possibilities do we have here. It looks very good. It looks very good for the pound, but this is only a first impression. We need to spend more time on the chart before we build a trading strategy. Another boom. Going to show you what I'm talking about. Another. That is very good. Let me just see, where is this trend line coming from? Yeah, here. Yes. This is not bad, of course. This is the daily chart. We have been trading above this trend line for a while. This is good. But what happened, of course, after breaking this trend line, we achieved very good profit to the upside. And then we started moving in a relatively horizontal way. Now, this horizontal movement is finally touching the moving average band, and as you can see, we are touching the top of this band. Unfortunately, this is a wide band, so we can still drop more before we recover. We are only touching the beginning of this wide support area, and that is why we need to be careful. But this is the daily chart, and I want to see the 4-hour chart and hourly chart before we make an opinion. As you can see, guys, horizontal movement obvious on the 4-hour chart, and the top of the bottom of these horizontal movements are really easy to identify. But are we getting more than one level here? Yes, we are. So basically, right now, one observation that is not very good is that we topped in the previous recovery attempt, which we just talked about, reaching above 29, topped inside the moving average band, which is not good, to tell you the truth. Unlike the hourly chart, here we do have resistance in the moving average band, and this resistance is still a little bit above current market prices, around 50 pips or so. We need to break this resistance before we jump up and down in excitement for the bullish possibilities. And if we draw a trend line coming from last week high and touching the this week's recovery attempt, the tops which were seen there, we can see that this trend line is actually a little bit below the moving average band. And I'm gonna switch to my hourly chart to fine-tune that. I'm going to fine tune this trend line and see where it lands. Okay guys, so now, oh, now this is better. Why is this better? Because the trend line, guys, that we are interested in on the hourly chart is very, very close, or actually it is inside the moving average band. That's why I'm going to use this trend line. Definitely I'm going to use this trend line as my initial resistance for the day. And at this exact hour, it is running in the 60s. And of course, it's going to drop maybe 1 pip or something like that each hour with the appearance of each candle on the hourly chart. Let me see when during the American session it's going to continue to be in the 60s, but in the lower 60s. So definitely our resistance is going to be the 60s, but where I would like to use this low here, 64. So I'm going to use the resistance 64. What about the support? The support is probably around these levels, these areas. Remember that we dropped, of course, towards, we had the target for our short recommendation. I think I'm not sure, it was yesterday maybe, or from late last week. I think it was 28.13, and of course we dropped, but we did not get to 13. We got very close to it, to 21. Again, today we are at 25. So the 20s are the levels that we need to care about. 21, 25 here. What about retracement levels? I think there's something just below 20, and I'm going to use that. I think it's 13. Let me refresh my memory with this calculation. Let's see if I'm remembering things well or not. Yes, it is 14 actually. Here it is, 78.6. It is at 14. So I'm going to use this as the support for more than one reason. One of them is that we approached this level twice, but never touched it. These lows are also very close to it here. As you can see, this is a very accurate touch. Here we have levels that are very close to it. And here, of course, this whole area is very close. Horizontal trading area is very close to 28.14. That's why my support for today is going to be 28.14. And with 50 pips between the support and resistance, that is good for building strategy. That is not very far or very close. That's good. Okay guys, so let's start building this strategy. Immediately when we start trading above 64, I want to be long. I don't want to wait too much. 5 pips above that, I'm long. So buy at 28.69. Now the stop, of course, because of what is happening on the hourly chart, we are finding support where we should, and the indicators are pointing to oversold conditions from which they are starting to recover. We prefer the upside. That's why only 5 pips above the resistance and we get it. But for the support, I want to place my stop further away below the support. So it's not going to be 5 pips above, below 28.14. It's going to be, how about 20 pips? So 27.94 is going to be my stop. Stop at 27.94 with a buy at 69, then we have 75 pips of a stop loss. Reasonable. That is the kind of risk I am willing to accept. I don't want to see stops of 150, 160, 200 pips. A lot of people use that, but it's too much in my opinion. But what I really like is something between 60, 70, 75, something like that. Not very close, so they don't get triggered or hit, let me say, easily and often, and not very far, so they cost a lot of money. Right in the middle between these two extremes. So guys, we're going to buy the pound if it gets to the upper 60s with the stop just below the 28 landmark. Now, for that, I would, of course, need targets, and I'm going to give you two targets as usual. Initial target is going to be a modest one, and the second target is going to be a more ambitious one. Initial target. Recently, we have reached a top, which is here, this top right here. It is 29.12. I think this makes absolutely perfect sense, but just to make sure that I'm doing the right thing, I want to calculate the retracement levels for this drop here. And I want to see, is there anything that is very close to the previous stop? 61.8. Oh my God. Oh my God. Can you see this, guys? This stop is 29.12. This Fibonacci level is 29.13. So I'm going to use 13 as my initial target. 29.13. Now for my second target, I want it to be something beyond that, and of course we have a resistance at 29.76. I remember it from last week, and we said that the psychological level at $1.30 makes perfect sense. Well, guys, of course, we have a perfect buy recommendation here. We know the targets, we know everything. Now, for the sell recommendation, which is going to be a reverse of the buy recommendation, we do have a target, and that is the 27. I'm going to show you why I am interested in this level. All right, guys, so let me remind you that 27 is an important level. We have talked about this level many times. It is the first key Fibonacci retracement level for this recovery attempt. This is unbelievable rising move, very sharp and very strong. We have not retraced 38.2 retracement. We have not retraced to the 38.2 retracement level for this move, and it's still below us. So if we start dropping, we need to care about the first Fibonacci level, which is 2701, and that is of course why we have an initial target 2701. I know that it's 93 pips. I know that, guys, you may be preferring to have a smaller target, but believe me, we should not target if we start trading below the support levels that we found recently. We should not be targeting anything less than that, because it is the first Fibonacci level. It is the first Fibonacci level for that. And the second one, of course, is the second retracement level. That's an easy choice, of course, 2604. It's the 50% retracement level. So these are the recommendations for today, guys, for the pound. Okay, now we do have a long at 28.69 and a short at 27.94. And I'm gonna go immediately to my QTimeFX live account, and I'm gonna place these orders. I'm gonna place an order to buy if we start rising, 28.69, with a stop at 27.94. and a limit at, I'm going to use the, I'm going to use target 1 on this one, although I really think that we can move higher, but this is enough for now. Okay, guys, so there you go. A long at 28.69, a stop at 27.94, and a limit at 29.13. And okay. Now, what about the sell? Of course, it's going to be the exact opposite. And entry points and stops. I want to sell stop if we reach 27.94. My stop is going to be 28.69. And my limit here is going to be 27.01. So it is 93 pips. I know you prefer smaller targets, but this is this is the one that I really want to use for this short position, in case, of course, this order turns into a position and place. And there you go, guys. So stop at 27.94, stop loss 28.69, and take profit at 27.01. With this, we're done with the pound. We still have time to take a look at our beloved dollar yen. And the dollar yen, of course, you know that recently, guys, I have been extremely interested in the dollar yen because I believe that we do have a great trading opportunity. We have tested a very important level at 109.37 and it survived several times, and everything points to one conclusion. If the dollar yen does not break above 109.37, there's a great opportunity to make hundreds of pips of profit by shorting this pair. And this is exactly what we are trying to do right now. Yesterday, recommendations were not touched. We did not touch the recommendations that we issued. Now, the resistance is not going to change 109.37, although we're getting closer to it. Of course, I'm not going to change that. I'm going to place these 5 stars, excuse me, at 109.37 to indicate that this is a very, very important resistance level. Now, what about the support? Do we have a closer support? Of course we do, because yesterday we were counting on this level, on this rising trend line, sorry, and we said that all we need to see in order to justify a short position is trading below this trend line. As you can see, we have not traded below this trend line or below the moving average band. And we of course, we said it was at 80 at the time, around here, or very close to 80. We used this horizontal line to identify support. But for now, we are going to look for a higher support. It's going to be a few pips above it, of course, not going to be a lot. The market is moving in a very slow manner, and that, of course, will not change support and resistance levels in a dramatic way, only slightly. But the overall picture will continue to be, and this is the most important thing to me, even more important than specifying the support for today. The overall picture, guys, is going to be negative, and it is negative. It's going to continue to be negative for as long as we do not break below, above 109.37. As long as we are below that level, we are looking to sell. And this sell is not the kind of situation where we are looking for 50 pips, guys. Believe me, if we do not break above 109.37, we can achieve hundreds of pips of profit on this pair. But once the price, if and when the price start trading above 109.37 with a good number of pips, like 20 to 30, not 5 or 10 pips, 20 to 30 pips above that level, I will surrender, of course, and I will say I was wrong this time, and I will close my short positions. But for now, I really believe that shorting the dollar yen is one of the best opportunities in the market. So guys, let me, before I specify where to buy, where to sell, and what is the support for today, let me show you why 109.37 is the single most important resistance level for the time being. I'm going to use another chart, and I'm going to keep you on the chart full screen so you see clearly why this level is very interesting to me. Okay guys, first of all, you remember this infamous flash crash. After the flash crash, and I've said this many times recently, but I'm sure some of you guys are here for the first time and they want to understand why we are really focusing on 109.37 the way we are. So we had a flash crash very early in the year, I think, yes. And after this flash crash, the market recovered from a bottom seen during the flash crash of below 105 to levels above 112. From there, another attempt for the yen started. The yen is very strong. It pushed the dollar down lower and lower from 112 to 104 again. This low is very close, or relatively close to this low here. And as you can see in the 104 areas, we found two very important bottoms. Now, after that, the price started to recover. And when the price started to recover, something happened. And that thing was that the price reached the 61.8 retracement level at 109.37 and failed to break above it for now. It's like three weeks from this top here, but we got closer to it even late last month, so it's almost 1 month. We have been close to this level for a month now, and we did not break it. But why this level is so important? We have many retracement levels, so why are we focusing only on the 61.8 retracement level? And for that, I want you to take a look at what happened here early in August. This was the first day after the first rate cut on the dollar, which took place on July 31st. Now, at the time, the dollar moved higher when the rate cut was announced, but then the markets came back to their senses and said, hey, we got a rate cut on the dollar. Why are we moving to the upside? And market absolutely crashed. In 3 days, as you can see, from levels above 109 to levels that are just above 105. This was unbelievable move, an unbelievable move. 3 days of unbelievable bearish pressure, and then later we found even lower lows, and late in August we got to 104.45. So 104.45 was the bottom from which this recovery started, and this last part of the drop started also from the 109.30s, because this high is 109.32. So we have 32 here, we have 37 in the Fibonacci, and recently we have many daily highs that are very close to that level. Starting with October 30th high, 109.29. And again, in November, we tried to push beyond this top, only to reach 49 and to drop again. However, just like what we did here and here, again, we found support in the moving average band, inside the moving average band. And of course, this is bullish, but against a Fibonacci level, we can assume that failure at the Fibonacci level is a very important sign. So as long as this Fibonacci failure here is going to be in the market, as long as the market is not trading here in these areas above 109.37, then we can assume that finally the moving average eventually it's going to give way for the bears to take complete control of the market. And this is the thing, guys, that is going to happen for as long as we are not trading above 109.37. Now we are getting closer to that level. Yesterday and today we are trading above the 109 landmark, and that of course gives the bulls an opportunity to attack this level again. And if this level is tested, we need to pay a lot of attention to this test, because the move away from this level, no matter which direction, in my opinion, is going to provide us with a fantastic trading opportunity. Fantastic. Especially if it was to the downside. But even if we break this level to the upside, we can get to 1013, yeah, but I really believe that a break of this level indicates the bull's ability to trade at or beyond the recent top 1240. So in both cases, we are talking about hundreds of pips. We're not talking about an opportunity to make 50 pips here, guys. And I am heavily biased to the downside, but I will immediately stop talking about the bearish possibilities if the market breaks above 109.37 with 20, 30 pips, something like that. We'll decide on that in the coming minutes. So I am a bear on the dollar yen. I expect the market to crash, not drop. It's not going to be a drop. It's going to be a crash to levels below 104, minimum 104, and that means of course 500 pips below current prices. That is a very sizable move. But of course, as I said before, and I'm going to say it again, this comes with one condition: not to trade above 109.37. 109.37, guys, is the thing that we need to watch with both of our eyes. It's the most important level on the dollar yen for now. Above it, there is something is going to happen, and that is going to be bullish. Below it, there's another completely something different, and that's going to be bearish. So in both cases, the opportunity is there, and we want to be ready to use this opportunity. That's why I'm going to specify a support now, and if we break below the support, I'm going to initiate a short position. If we break above the resistance, I'm going to initiate a long position. Did you hear me? Although I am really excited about the bearish possibilities, but we do not get married to trends here or trades or whatever it is. If you have a trading idea, let this trading idea prove that it's right in the market. And I have a trading idea of selling the dollar yen. Well, okay, let it prove itself with a breaking, or first, before breaking, with trading below an important resistance and then breaking below an important support. When these things happen, then this trading idea that I am very excited about will prove itself in the market. But if that does not happen, then I will have to get rid of this idea because it is not correct. So very simple technique we're going to use today. We're going to follow the direction of the break above 109.37. We want to be long, or below the support that we are going to support. Right now, we are going to be short. And fortunately for us, these two levels, the support and resistance on the dollar yen, are getting closer and closer to each other. For example, yesterday we had 57 pips between them, but today we are going to have even less than that, which makes it easier for us to build trading strategies with reasonable stop loss levels. So guys, this trend line is currently at 85, but it's a rising trend line. It's going to continue moving to the upside. And one more thing, I'm really interested in this moving average band for several reasons. Or for not reasons, it's the same reason, but it was, copied several times. It appeared on the chart several times, and that is, of course, the price finding support inside this moving average band, like here, like here, like here, very close to it, like here. And that makes me believe in the importance of this moving average band. The bottom of this moving average band is very close to yesterday American session low, which is, guys, 108.98. So this is it. This is the bottom that I'm interested in. And as you can see, it is extremely close to the bottom of the moving average band. This, of course, gives me little doubt in using this intraday low, which is supported by the moving average, as my support for today. So I'm going to change this. Yesterday it was 80. Today it's going to be 98. And as you can see, this means that the support and resistance are getting closer and closer to each other. And now I can, of course, start building my trading strategy. If we break the support, first I'm going to talk about the bearish possibilities, because I'm very excited about these possibilities in specific. So if we break the support, I want to sell, and I'm very excited about this sell. 108, 5 pips is enough, 93. Now, the stop definitely needs to be above 109.37 with a good number of pips. I'm going to use 30 just to make sure that some attempts to break above this very important resistance level will not fool me. I'm not going to fall for long only 10 pips above it or 15 pips above it, because that can happen. We have already seen 109.49. Remember, guys, earlier this month, we have reached as high as 109.49 before falling down. So I don't want to be buying this thing in case of just a little bit of trading above 109.37. If I want to buy the dollar yen, I want it to be after a confirmation that 109.37 is broken. And one of the ways to confirm that it's broken is to use a good number of pips above it, not a small number. Now let's look for targets. Target 1 and target 2. Initial target is going to be modest, but not very modest, nothing less than 50 or 60 pips, because once we break below this moving average band, that will happen for the first time in a while, and that would indicate exhaustion here, and that will open the way lower to much lower levels. So let me see where we can place our limit for this trade. If we break this trend line, and of course this moving average band is the beginning for that, once we start trading below the moving average band, the odds of breaking the trend line will become better, of course. That means that we will be ready to trade below the bottom from which the trend line is drawn. And in this case, this bottom is 25. We have another very close bottom here at 22. And let's see if we have retracement levels just below that. I want something that is just below these two bottoms right here. For that, of course, I will need to use the advanced Fibonacci levels. We have 21, of course, it's obvious, and we have 108.05, the 88.6 retracement level. This is the one I want to use. So I'm going to use 108.06, actually, it's not 05, 108.06 as my target, 87 pips. Yes, this is the kind of target I want to look for today when I short, and if I short the dollar yen. But I don't want to give you a target of 20 or 30 or 35 pips, guys. This is a great opportunity to go short. Once we start trading below the moving average band and this trend line, we should not close our position with a profit of 20 pips. This is my opinion. Now the second target, of course, you know me, I'm expecting 104. And that is going to be my long-term target, but maybe I'm gonna give you a smaller target today. I'm going to delete this retracement level, so make things clear. I'm going to use this calculation. What about the 50%? 7, no, very, very close. Actually, I'm going to use this as my initial target. I changed my mind just a little bit, push it to the down side, 8 pips. I'm going to do that. And 78. All right. So I'm going to adjust this to 107.98. I think it's a very important retracement level, just a little bit below my initial target. My second target is going to be around 712. What do you think about that? Yes, I think that is good. Is it 12 or 11? 11.6. Let's call it 12. Yeah. So this is the sell recommendation for today, guys. But what if a huge surprise happens and we break above 109.37? Of course, this can happen. It's a market. It can move in any direction it wants, especially that we have been moving to the upside recently, as you can see. Last week, the low was 108.25. Now we are at 109.15 or something like that. So we are talking about 80 pips to the upside. We cannot neglect this, guys. Even if we are bears, when the market is moving to the upside, we need to acknowledge that it is moving to the upside. What we need to see here before we initiate a long position is a break above 109.37. Any recovery or bullish attempts that fail to break above 109.37 will not be harmful to the bearish expectations. So only with a break above 109.37 with a good number of pips, I'm going to use 30. In that case, a long position will become justified. Now the stop is going to be the entry for the sell. Stop at 108.93. And now targets, I remember them from last week, to tell you the truth. We have a retracement level at 10.13, I'm going to show you. And we have the recent top, not recent, not so recent, but the most recent major top, let me call it, at 12.40. Okay, so this is the recommendation. To long with the recommendation to short, which is my favorite. But even if I have one favorite, of course, I'm going to follow the direction of the market. So you see me talk about the bearish possibility on the dollar yen with excitement, and I have been doing this for days. But you are going to see me dollar yen long if we break above 109.37. This is how you become a professional trader. You do not trade opinions, you trade market actions. When the market is moving in one direction, you follow that direction, even if that direction is against your expectations. But of course, you need to specify a resistance, a support level that, if broken, you will feel good about admitting that you were wrong this time. For me, I'm a huge bear on the dollar yen, but that comes with, of course, a clause in this contract that I'm going to say I was wrong if we start trading above 109.37 with a good number of pips, not 5 or 10, 30 pips above that level. And I will say, guys, I was wrong about looking to short the dollar yen. Of course, nobody's right all the time. Everybody is sometimes wrong, sometimes right. And the most important thing, like George Soros said, is that it's not if you are right or wrong, it's how much money you make when you are right and how much money you lose when you are wrong. Okay, so I really believe in a short here, but you can easily see a long position on my account tomorrow when we come back. Maybe I will tell you that I have both at 109.67. Of course, if the market gets there, I am going to buy. It's not a maybe for me, but I said maybe, I mean, maybe the market will get that high to trigger my long order. So these are the orders, guys. And without delay, I am going to go to my QTimeFX live account and I'm going to place them. First, I want to place my favorite one, which is the sell. So I'll stop if the market starts trading below 109.98. I want to be short. My stop definitely will have to be above 37 with a good number of pips, 67, that is good. And my target is going to be the 50% retracement level at 107.98. 95 pips of profit, that is not very bad at all. And I'm sorry I'm not giving you 30 or 40 pips on today's recommendation. So this is the recommendation to sell, guys. Copy it, go directly to your QTimeFX account and place it, or take a screenshot, write it down, whatever you like, you can do with it. But this is my recommendation for today. And place. And as you can see, guys, now we do have an order to sell dollar yen at 108.93 with a stop 109.67 and a limit at 107.98 and done. We are about 20 pips above that level, so we'll see what happens. Now the buy stop, the long position is only justified with trading above 109.37. Not before that, guys. We are not very far from that level. So even if we got to 25, 30, 35, 40, I'm not gonna buy this thing. But if we got to 60s, the 60s, 109.67, I am going to buy that thing. And I'm placing an order, so I don't even need to think about it. If I'm going to, should I buy or should I wait? Or no. You don't need to go through all that emotional roller coaster. Yes, no, this is going to be okay for a long position. No, we were expecting a short. Why are we buying right now? No, don't go through that. You don't need to go through that. Do it like a professional. Place your order and say, that's it. If it gets to 109.67, then there is a reason to buy. And I'm going to buy. My stop is going to be 108.93. And my limit, yes, it's going to be 10.13. Just like last week, 10.13. 46 pips, yeah, that's okay. That's okay. And place, guys. And there you go. Here's your order for today. The second order on the dollar yen and the last order we are going to place today, along at 109.67. I hope it does not get triggered. But if it does, it does. That's it. I'm in. At 109.67, my stop loss is at 108.93. And let me double check the numbers. Yes, 67.93. And my limit is at 10.13. And boom. And with this, guys, we come to the end of yet another webinar, another great time for me with you guys, your company, my beloved viewers. I really appreciate everybody who has been here for the past 3 hours or so. And I really hope that this was helpful to you, helped you see where are the important support and resistance levels on the market on most major pairs or most major instruments, and that you are going to use this information to go directly to your QTimeFX account and place your orders there so you can make some money today. I really hope you will. I really hope that tomorrow we'll be talking about our profit, and that's why I want you guys to meet me again 21 hours from now at the same time every day, of course, 6 a.m. GMT or at 2 p.m. Singapore and Hong Kong, and we are going to meet again every day, looking for trading opportunities, talking a little bit about the market, giving you the best advice about the market every single day. So be there. I will be waiting for you all, and I will be very happy to spend another webinar with you guys talking about the market, looking for the best trading opportunities in the market, and acting upon them. So until tomorrow, I really wish you all the best. Great trading ahead. It's going to be an exciting day. This is what I feel. I feel that we are going to have some movements today, because recently it has been very boring, especially on the euro and the yen. I want to see something there. I don't care which direction. Just please give me some kind of a break that I can work with, because I'm a trader who waits for important levels to break and then I jump in the direction of the break. Okay, guys? So, as I always sign off, good trading and good luck to you all, and see you again tomorrow, 21 hours from now. And finally, of course, before I go, I want to give a huge thank you to our sponsor, QTimeFX, for sponsoring this live stream. Guys, QTimeFX is offering you fantastic trading conditions, starting with the leverage that goes up to 500 to 1. These are the guys who got the award for the lowest Forex spread broker of 2018 by ACIFMA. Now, imagine yourself trading with spreads like this: 0.4 of a pip on the euro dollar and the dollar yen, with zero commission. Of course, if we offer you to trade with these great spreads and then we charge a commission, then you will not be using this spread to your favor, because you are going to be using it to the favor of your broker. But no, that's not how QTimeFX do things. You know, these guys, they do things in a different way. They want you to make money, and that's why they are offering you these very, very tight spreads with zero commission, guys. And if you are the kind of investor or trader who is asking, where are my funds located, let me assure you that they will be segregated in UOB, which is ranked in this 22nd place in World Bank ranking. So you don't have to worry about that in any way. And of course, to top that, we have the generous bonus offer that is going for you right now. It is our current promotion. Open a VIP account with QTimeFX with a minimum of $150 deposit, and you will be eligible to get a very generous bonus. If you deposit $150, you are going to get a bonus of $250. And if you deposit $300, then your bonus will be a fantastic $500 of real green American dollars, guys. This is not trading credit. This is real money in your account, which you can withdraw after trading a number of lots, of course. But to get these promotional benefits, guys, you must contact FX_Edicast via Telegram. Okay, guys? So you must contact us. And when you do, I assure you, you are going to find the friendliest, most professional team in the world, ready to help you, ready to answer your questions. If you have any question about the broker, about QTimeFX, or about the promotional benefits that we are offering right now, including, of course, on top of that, the bonus. Everybody's asking us about the bonus. So if you have any question, please shoot. We will be there to answer your questions with smiles on our faces. And if you want help in opening the account, of course, we're going to help you. We're going to direct you to do the right steps in order to open your live account with QTimeFX, our favorite broker in the whole world. So what you waiting for, guys? Fantastic leverage, fantastic tight spreads, zero commission, segregated funds, bonus, and of course, these free webinars that are made just for you and paid for just for your sake by QTimeFX, because QTimeFX wants you to achieve profit in the market. So contact us at FX_Edicast via Telegram, and let's open this account for you today, so you can tomorrow apply the trading ideas that I will be talking about in the webinar. Okay, guys? Wish you the best. Great trading ahead. I really, really hope you guys will have a fantastic day in the market today, and that our recommendations will end up in profit, and we'll be talking about the profit tomorrow. Keep your fingers crossed, and see you again tomorrow. Good trading and good luck. This is Munther Marji CMT signing off.